Welcome back to GymFX. Today I'm going to show you the exact strategy that you can use to grow your small account, even if you are starting with $100. So this is the same approach I use to grow my small account, simple and realistic. So watch it up the end. So now this strategy, it is pure price action, no fancy indicators. There's nothing like confusion, so it is pure price action. We shall look mainly on fair value gaps and the order blocks, supply and demand, and uh, support resistance, but mainly we shall look at supply and demand, order blocks, and the fair value gaps. Okay, and we shall add it with market structure, right? So now here, for example, or is you have to look where the market is trading from. Is it bullish, is it bearish, or it is in the range? So if you know that, first of all, it is what matters, right? So now, for example, the first thing here, it is the market structure. You can see this is a bullish market structure. Why? Because it is breaking higher highs and higher lows. When you come here, you're clear see that the market was when you draw a plain line, it was in the bullish trend because of those higher highs and higher lows, right? So now when we start from here, you realize that the market was moving in the you'll see that if this was a low here, the market came and it made that high, it came back here, it made this low. You can see the high, the low. There were always breaks of market structure, and whenever the market came and broke the structure, it always made a retracement. Okay, so now always we shall look at the retracement. Where is it going to retrace up to before it moves, okay, to our direction? Now, for example, you can see the market. Okay, you can see the market, it is bullish. There are breaks of higher highs and higher low. Because now this was a high, you can see that when it broke this high, it came back to a certain zone, then it bought again. When it broke this high, it came back to a certain zone and bought again. Okay, so now there are consecutive breaks of market structures. So it is what we want to look at, right? So now, for example, let's come to the first high right here. Whenever the high is broken, we have to look for some zones in the discount level, right? So now here, this was a high we have talked about. Now you can see it was broken from right here, okay? So it was broken from right here. And when it breaks that high, we always come and pull out your Fibonacci retracement tool if you really want it. We always trade in a certain range, right? Now, for example, what do we mean? What do we mean by a range? When a market is broken, it will create a range. When it creates a range, that means it will be trading from that range. How? Here there is a market at the break of market structure. When it breaks, it will create a new high, right? Now this new high the market has created, we first mark it, right? You mark this new high the market has created. Then also you mark the previous low that the market left, right? It left this previous low right here, okay? And this is the new high that the market created, right? Now always we have to trade in this range. This is the range that the market has given us. Now in this range, it is where you have to look for your zones. It is where you have to look for your order blocks. It is where you have to look for your fair value gaps. Okay, now this is the range. You can see that you have your order block right there, and also you have your fair value gaps right there. So all these are order blocks. It means that the market is trading in this range. That's why you have to look for confirmation is in the range that has been created. Okay, so now after doing that, then the market, you'll see that when it came to a certain order block or a certain fair value gap, it just bought. So we always trade in a certain range. You have to put now your stop loss just below and your TP on the previous high, right? Targeting a 1 to 2 trade. Then after that, you always have to look for the new range. When the market breaks, it creates a new range, right? You'll see that there is another high that was created right here. This is the previous low that the market created, okay? Then also, this is the high. This is the new high. We always consider the new high the market created. So that is the new high. Now we shall be trading from this range, right? We shall be trading from that range. And inside that range, it is where you have to look for your zones. Now in this range, you will see that there was this order block that was in our range, okay? And also inside this range, there was a fair value gap right here, okay? There was a fair value gap right here. Then the market, it can come to any zone. When it gives you confirmation on a certain zone, it is your role to enter from there, right? Now you will see here that when the market came to a fair value gap, it didn't reach our order block. Rather, it just reacted from a fair value gap. When it came to a fair value gap, it created some bullish signals. Then traders would just come and risk from here, right? So it means that it traded in a certain range, right? That means you have to always look for a range. When the market has not given you the range, it means that one, even if you just leave that. So now the market reached somewhere and made a market structure shift. How do we trade market structure shift? Now, for example, market structure shift, the market might be trading in a certain direction. For example, it is trading in a bullish trend, higher highs, higher low, higher highs, higher low. Then it will reach a time, then it breaks this previous high, this previous low, then it starts creating higher lows and lower lows, okay? Always, this is what we call a market structure shift. It has been breaking highs. It has been breaking highs, higher highs and higher lows. It has been breaking highs. Then until the market reached here, it takes out the liquidity from up and also takes out the liquidity from down. You can call it a change of character or a market structure shift. So that's how we shall trade this market structure shift. You are seeing here the market was bullish. It reached a certain point. Remember, we had this right here. This was a high, low, high, low, high, low. Then it created this low right here, okay? When it created that low, so our role was for us to wait for that low to be broken. Remember, there was that low and there is this high right here, okay? Then you would see that here, when the market came and broke that low right here, when the market came and broke that right here, it means that it changed the structure. It made a market structure shift. It made a change of character. That means we have changed from being bullish to bearishness, okay? So now here, after doing that, now we are going down. We are creating higher lows and lower lows. Now we are going to look for the range in the bearish direction. Now there is this low right here and there is this high right here, okay? So now we have to look for our range inside there. We have that and we have that. You'll see that when the market came, you can see how it came back to your zone right here, okay? Can you see this was a fair value gap, though it was big, but when the market came to this, it created an insider candle. This was a momentum candle, the bullish one, then it created this bearish candle inside. That means it was a very good sign for you to enter your short position from right here. Then the target was supposed to be right here, almost 50 pips. Then for the risk, of course, you know where we put our risk, okay? So now here, after that, there was a low right there. When it breaks that low, the range is between this higher low now and this lower low right here, okay? This lower low right here. Now we are trading from this range. You will see that the market will, you look for your zones in your premium zone now, right? Between that range and this range now, it's where you look for your zones. You look for your fair value gaps, you look for your order blocks in this zone. Let's see how many did we have right here. Actually, the market didn't come to your premium. It just traded from this support level, right? The support turned into resistance. It just traded from that, right? From that level. It means that it didn't give us what we wanted. So we said, okay, so now let's go to this. There is a break of market structure right here. Can you see this? That is a break of market structure right there. Then after it breaks, now it had created this range. There is this, there is that higher low, and this lower low right here. So that is our range that we are trading in. After getting the range, you know what to do, okay? After getting the range, now we had our zone. That is a zone. That is an order block. Can you see that when the market came back to your order block, can you see the confirmation that it gave you? Okay, it rejected this order block very well. This was a bearish sign to show you that it is selling, right? So now traders would just risk just there immediately after getting bearish confirmation. Immediately, you would even put your stop orders right there. Whereas, you know the TP, you know where we put the TP, it is right there. Then the stop loss, it is always above this. Okay, it is a 1 to 3 trade. Then you can see also it changed structure. It changed the market direction, right? It reached right here and it changed market direction, right? So now it was bearish till it reached on a certain point. Okay, so it was bearish till it reached here. How? You can see that there was a low right here it had created. This is a low right here. And it created a high right here. Okay. When it created that high, of course, it came and broke it. The market broke that high. Though it didn't come back to retest the order blocks from down. But at least it broke that high it had created. Meaning that yes, we have turned from bearish to bullish. Now we had to wait till it starts giving us clear sign of bullishness. Okay, so now till we waited up to here. When it reached here, it gave us this low. It gave us a low and it gave us a high, right? That means there was a break of market structure right here. When it breaks structure, it came back to your fair value gap right here. This is the fair value gap that it came to. Can you see how it traded from that fair value gap? It just traded nicely, right? It came back, gave you confirmation, bullish confirmation, just enter, don't wait, okay? This is a 1 to 4, 1 to 3, right? So now, the high it had created, after that, just mark it. Don't wait for anything. Just mark the high and wait for the break of market structure. After waiting for the break of market structure, look for your range, okay? Look for your range. You say that, okay, I have this low right here and this high right here. That is the range, right? So after looking for that range, trade inside this range only. You will see that inside your range, you have different zones. You have an order block right here, okay? And also you had this one down here. So any order block that the market come to, just get confirmation and enter from there. Can you see that it just traded through your range? Okay, till it reached here also. Now it was bullish and it reached here, it turned to bearishness. Why? Because it created a market structure shift or a change of character. How? Also, this one, it is another example of market structure shift. Why? Because now here, it was moving in a bullish direction as we have seen. It created this high right here. Now, traders, I was also waiting for this high to be broken here to confirm the change of character. Though it just liquidated us and didn't first break that high from there. Rather, it just created a fake break, okay? This is a fake high, right? Because now this one was a high. That one was a high. It was a high that was resting from there. Then the market failed to break that high. It created this higher low rather, right? It created that higher low. Instead of coming and breaking that high, rather it just created a higher low. And when it creates a higher low, remember it had left this low from below here. It had left this low from below here. That means our role was to wait for that low that the market had left to be broken. When that low is broken, it would confirm to us that we are bearish. And yes, you can see that it came and broke it from right here. You can see this move. From there, it came and broke it from here. And when it did that, of course, we had to wait for your market to come to our zone. This was an order block. That's why you can see that the market came up to your order block before it sold again, right? So now it gave you an insider candle as your confirmation. Of course, you have to risk and you put your TP somewhere, okay? You have to always put your TP according to your risk tolerance. And the market kept on moving down, you can see, till it also reached here. I'm showing you how always the market turns direction. Then when it reached here, it created another sign of change of character, another sign of market structure shift, because that is the high the market had left. When the market left that high, there's this low that the market had created. It means that we are waiting for the market to come and break this high, right? We are waiting for the market to come and break that high. And of course, the market came and broke that high. You can see from right here, okay? It came and broke that high. When it broke that high, of course, we had to wait for this market from a certain zone, which is an order block right here. This was an order block right here. Now, there were very many people who were liquidated here. Why? Because we had a lot of early buyers here. Let me show you the liquidity concept here that we always use. Sometimes the market will always come and liquidate the early buyers. Why? Because when you look at this low here, look at that low. When you look at that low, you'll see that all these candles that were formed here, they closed above that low, okay? They closed above that low, this low here. None of the candles that closed with a full body down. So now, why some people were liquidated? Because some people, when they enter the market, for example, you find some people, when they enter, for example, now, when they enter their market from here, when they enter their market from there, some of you, you come and put your stop loss just here, okay? Just there. Instead of extending the stop loss, or we always use 15 to 20 pips. You have to extend at least from the zone, at least use 15 pips down to always leave the market to breathe. Some of you don't leave the market to breathe. You just give it very little space for it to turn, okay? Because sometimes we expect that. We expect liquidity sweep. Sometimes the market to move in a certain direction, it first sweeps liquidity. Yeah? It first takes away the early buyers or the early sellers, right? That's why we give a lot of space for the market to breathe. You can see that the market started moving up, okay? So now this is also another setup that we used to catch this trade last week here. There's this high. There is this high right here. When the market broke that, we said you always look for your range. I saw the range here from that high and this low right here. Then I said, okay, so now it means I'm going to trade in this range. So what I did, I just marked my order block. It was kind of big, but it was it was worth it, I just marked my order block. So when I marked my order block, I waited for the market to come back. I went to my 15-minute time frame to get confirmation. Let me show you. So I went to my 15-minute time frame. Then in my 15-minute time frame, I was waiting for a confirmation. Can you see when the market came and tapped your 15-minute time frame here? There are some confirmation also that you can look at in your lower time frame. You can even go to M5. In M15, the market aligned with your higher time frame, which is H1. You can see that in M15, the market was bearish. Then it came here and started aligning with your higher time frame. It also created some change of character, some market structure shift on your M15 because it had to be in the same direction with your higher time frame. You can see that I've marked the high and the low. So after aligning there, that means it was a very good signal for you to enter. This one, going to your lower time frame, it just help you to always use a small risk to a bigger reward. Okay, when you always go to the lower time frame for confirmation, it gives you a bigger reward and with a small risk, guys. So hope this video has helped you guys. So if you want more of these videos, consider subscribing and comment down there which strategy you are using. And if you want a free Forex trading PDF for complete beginners, links in the description. Thank you for watching. Bye.